you're thinking about how to or whether to increase the size of the PEPP program, are you orienting yourself to the scale of new government bond issuance this year? It seems like analysts are thinking about it in those terms, that there might be about $750 billion of new government bond issuance in the Eurozone. Is that a factor that you're looking at closely when you think about whether to increase the scale of the PEPP? And my second question is that your measures today were really focused on the banking sector. Is that for a particular reason? Are you seeing any particular stresses in the Eurozone banking sector at the moment? Thank you.
Thank you very much for your question. You know, our PEPP is, as I said, one huge component of our purchase program capacity. Don't forget that you also have these other components that bring it all together to over €1 trillion. That's one. Second, you know, we, as I said, will use full flexibility to deploy this particular powder in the right direction where we feel that there is a risk of tightening, and where we feel that we need to intervene to protect and preserve our monetary policy stance and our monetary policy transmission. As I said, flexibility means across classes of assets, across jurisdictions, across time. And in terms of timing, I also remind you that the length of the duration of that PEPP will be determined by the Governing Council, taking into account the pandemic crisis time. We take into account all indicators that we can, and our purposes are very simple. Monetary stance, monetary policy transmission, appropriate level of liquidity, making sure that credit flows. And that takes me to the second part of your question. Our TLTROs, and this particular one in its latest iteration, that can go all the way down to minus 1 percentage point at which banks can finance themselves, is intended for the real economy, is intended for credit to flow to the real economy, from the large corporate to the sole entrepreneur and everything in between, because it is associated with threshold that banks have to demonstrate they are reaching. So in other words, if they make sure that they don't leverage, if they continue to have their full exposure, and that they continue to give credit to the economy, then they become eligible to this particularly favorable rate. It is not without consideration that we have reframed this TLTRO. So it's not intended for banks. It's intended for the financing of the economy. We regard that as an absolute imperative if we want the economies of the euro area to actually be in a position to resist the extraordinary shock that it is suffering, and to be in a position to pick up strength and to continue to exist and invest and create those jobs that are being that are vanishing at the moment. That's what we're doing.